Experts are projecting quantum computing to become a $1 trillion sector within 10 years. To put that in perspective, that's the equivalent of the entire economic output of the Netherlands. That's run a country type of money. So it stands to reason that investors are very interested in the best quantum stocks right now. Today, I'm mapping the entire quantum investment landscape across 6 stocks, including the infrastructure giants already profiting today, to the pure play builders betting everything on quantum hardware, and even a sub $10 penny stock with billion-dollar ambitions. Before we dive in, let me introduce myself. I'm Steve Reitmeister. I was formerly editor-in-chief at Zacks.com, and now I'm partner at WallStreetZen.com, where our quant team analyzes thousands of data points to help investors more easily find winning stocks. If you find value in videos like this, then hit that like button right now. It helps me to know to keep making more of them in the future. Now, before we get into the stocks, let me quickly frame why the market niche matters right now, because it's not just hype. The $1 trillion projection is backed by serious institutions, and the timeline is accelerating fast. In the past 12 months alone, Google announced its Willow quantum chip, which solved a benchmark computation in under 5 minutes. To put that into perspective, that same computation would take the world's fastest classical supercomputer 10 septillion years to find the answer, or to put it another way, longer than the age of the entire universe, right? Microsoft also announced a breakthrough in topological qubits, a completely different architectural approach that could solve one of quantum's biggest stability problems. And defense departments across NATO are actively funding quantum sensing and encryption programs because they understand that quantum advantage in military applications could shift the balance of power. Now, with so much change afoot in quantum computing, I needed some objective, rational way to analyze these stocks. That's why I turned to our proprietary Zen Ratings quant model that reviews 115 different factors for every stock every single day. Everything from growth to value to momentum to financial strength. However, I am doing something a little different with today's video. Instead of just sharing the usual suspect names in quantum computing, I will also provide a few stealth names in the group, meaning stocks that are not only about quantum computing, but certainly part of its growth trajectory. We will get to those stocks a little bit later, so stay tuned. Let's kick things off with IonQ, with a symbol of IONQ. IonQ builds trapped ion quantum computers and is the most commercially mature pure play quantum hardware company in the world. They have real partnerships with Microsoft Azure, Amazon Bracket, and Google Cloud, and they are among the few pure play quantum stocks listed on the New York Stock Exchange. Okay, one reason people are excited about IonQ is that they already have enterprise customers in major government contracts. When quantum demand scales commercially, IonQ is already positioned inside the cloud ecosystem and most likely to benefit. But let's be real. This is a stock video, so the main question people are excited about is the upside potential. So right now, Wall Street analysts suggest IonQ could see over 200% upside in the coming year. Among the stock's biggest fans are top-rated analysts like David Williams of Benchmark, a top 2% analyst based on his stock-picking track record, and Quinn Bolton of Needham, a top 1% rated analyst. Okay, but here's the sticking point for me. The overall Zen rating is only a C, meaning it's only a hold rating. Even worse, their quant model rated the company poorly across nearly every component area, such as financials, sentiment, and value. Its only impressive area is growth, where it is rated a B, putting in the top 20% of all stocks analyzed. But most other metrics are downright dismal. It earns a lowly F for value, actually ranking in the bottom 5% of stocks we track for that important metric. It's even worse for safety, where it ranks in the bottom 2% of all stocks. Now, I don't mean to scare you by telling you all this, because yes, value and safety will always be the weakness for dynamic growth stocks. But despite bullish Wall Street forecasts, the Zen Ratings model is telling you this is more about speculation and not really a good investment this time. So be sure to treat it that way. For me, this would be a wait and see stock, as in it's worth keeping an eye on if it ever moves up to A and B rated overall. Until then, I will take a pass. All right, next up is Quantum Computing Incorporated with a symbol of QUBT. They create quantum optimization software for real-world use cases in logistics, finance, and energy. These are practical near-term applications that do not require a fully fault-tolerant quantum machine. Wall Street is psyched about this stock. Analysts set an average price target that suggests about a 125% upside from current levels. Even better is the street high target, which suggests over 230% upside potential. Before you get too stoked, unfortunately, our quant rating system paints a very different picture. Let's start with the good news. The growth rate is a B, which is the one bright spot in an otherwise cautious scorecard. The reason the name is interesting is the software layer quantum could monetize faster than hardware. But the overall Zen rating is a D, which is a sell, putting in the bottom 20% of all stocks analyzed. The rest of the component grades are unimpressive, with an F for value, F for safety, and F for financials. This means it's in the bottom 5% of all stocks that we reviewed. For both of the first two picks, there is some signs of hope from their Wall Street targets, but these targets are far from a guaranteed outcome. That's why I put much more weight in the 115-factor review of our Zen ratings model. All in all, these are more speculative, pure play quantum stocks. Do you see a trend? Exciting upside potential, but fundamentals that suggest caution. The Zen ratings were low on both of these. That's because these are pre profit companies with high cash burn. The model penalizes that heavily and for good reason. Now, let's talk about what might be a smarter quantum investing approach, the infrastructure giants that are already profiting today. Quantum is more additive to their already successful business models, not a break bet on quantum computing. And more importantly, when I ran these stocks through the 115 factors and ratings analysis, these are the names that actually scored quite well. That matters a lot because, as you saw, many of the pure play quantum stocks do not have the fundamental makeup of stocks that are likely to outperform as we move forward. Okay, that said, let's switch gears to look at RTX Company, also known as Raytheon, with a symbol of, you guessed it, RTX. This company is developing quantum radar, the kind that can detect stealth aircraft that conventional radar cannot see. They are building quantum sensors for precision missile guided, unhackable, encrypted military communications. It has never been fuller, and this explains why the stock is up over 50% in the past year. Not surprisingly, RTX earns a B Zen rating overall. This is a solid buy recommendation based upon the stock being the top 20% of the 4,600 stocks analyzed by our model. Growth is also a B based on the consistency of its growth across earnings, revenue, EBITDA, profit margins, and cash flow. Momentum is a B rating, also in the top 10% of all stocks. This reflects real price strength the model sees as backed by the fundamentals, not just hype. On the analyst side, four of the eight covering analysts give RTX a strong buy. That includes Seth Seifman of JP Morgan, a top 6% ranked analyst, and Ronald Epstein at Bank of America, who's in the top 9% of all analysts based on his stock picking prowess. Both rated a strong buy, citing recent wins including Stormbreaker weapon approvals and Coyote anti-drone program successes. A modest risk to keep in mind is the mild financial grade of C. This reflects integration costs from the legacy Raytheon merger still working its way through operations. And the quantum programs themselves are kind of early stage contract revenue, meaning not that large a line item yet. Remember, this is a defense play first, with quantum as a compelling long-term kicker to their growth and share price trajectory. Next up, we have another defense giant in Lockheed Martin, LMT. This is the world's largest defense contractor and one of the most active strategic investors in the quantum space through its venture arm, Lockheed Martin Ventures. They hold equity stakes in various advanced quantum ventures, including one of the other companies we already talked about, IonQ, as well as some others. On top of that, Lockheed is integrating quantum encryption technology directly into the F-35 program. LMT is having a moment, leading to the stock being up nearly 40% in the past year. Yet the Zen rating suggests there's more runway ahead. That's because Lockheed is an A-rated overall stock, placing in the top 5% of the entire universe. This is where we find a well-rounded component grade scores, where they nail it for value, momentum, and financials. The standout stat is return on equity, which is truly remarkable at over 80% in recent years. This truly blows away the industry average of around 15%. Now, let's also appreciate the strong safety grade of A, which ranks in the 96th percentile of stocks we track, meaning it is also one of the safest large cap stocks in our entire model. Across the board, the Zen Ratings model trusts this company's fundamentals. That kind of consistency across every component is a rare and meaningful signal. Shares have rallied hard over the past year, and some Wall Street analysts are starting to think it's fully valued, and that's not the best entry point for investors. Therefore, you might want to consider adding the stock to your free watch list on WallStreetZen.com to buy on any dips. Plus, we will update you to any forthcoming target price changes or any other analyst coverage from Wall Street. Investors considering Lockheed Martin should be aware that the company's recent investments in the quantum space are long-term in nature and may take time to generate meaningful financial returns. But overall, this is a compelling stock to watch with a solid connection to the quantum revolution. All right. By the way, if you've made it this far, go ahead and subscribe and tap the notification bell. That's because I share data-driven stock picks frequently, and this is the best way to get them first. Next up, we have Northrop Grumman with a symbol of NOC. Northrop Grumman is America's most advanced autonomous systems and space intelligence contractor. Their quantum investments span three areas: quantum sensing for contested GPS environments, think battlefields where GPS is being jammed; quantum networking for classified intelligence sharing between agencies and allies; and next-generation quantum radar. Northrop is currently ranked among the top defense contractors in the Zen industry ratings model. Its overall Zen ratings is a B, which makes it an appealing buy recommendation. This is no doubt because of its widespread strength in component grade areas like growth, momentum, safety, and financials, right? These are clean and well-rounded component grades. The best part is they truly have no weakness in their fundamental makeup. Drilling into the specifics, the standout data point is they generate $3.9 billion in operating cash flow. That is the kind of financial engine that keeps defense programs funded through any budget cycle. As we turn our eyes to Wall Street, we find 8 analysts rating NOC as a strong buy. This includes several top-rated analysts based on their stock-picking prowess, including Gavin Parsons at UBS in the top 10% of all stock pickers, Andre Madrid of BTIG, top 8%, and Kenneth Herbert at RBC Capital in the top 1% of all analysts for his stock-picking performance. As for risk, one thing to keep in mind here is that the stock is currently trading near its 52-week high, so near-term upside may be more limited than others that we discussed today. Also, it's worth noting that the quantum remains a small division inside a much larger defense operation. The tailwind is real, but it's just a tailwind, not the main engine of their economic growth. By the way, if you're looking for other stocks with excellent upside potential, I put together a special list using the Zen Ratings framework. Click the link in the description or scan the QR code on the screen to download our free report, 3 Stocks That Doubled This Year. Now let's close out today's quantum stocks with MKS Instruments with a symbol of MKSI. Here's my favorite way to think about MKS Instruments. Every quantum computing lab on the planet depends on their equipment. The precision instruments, vacuum systems, and RF power components that MKS makes are required infrastructure for building superconducting qubits. Plain and simple, you cannot run a quantum experiment without them. This is the picks and shovels play of the quantum gold rush, meaning that MKS profits regardless of which quantum company actually wins the hardware race. The stock is up significantly over the past year, but gladly our Zen Ratings model indicates that shares may have much more room to run. I'm referring to the overall B rating, putting MKSI in the top 20% of all stocks we analyze. Momentum is one of their strengths, as we often find that, just like in physics, a body in motion stays in motion. In this case, they're in the top 11% of all stocks for momentum, indicating that the fundamental attractiveness of these shares is being recognized by investors now. Wall Street is also appreciating the growth story at MKSI, given that 9 of the 13 analysts rated a strong buy. That's pretty strong consensus among the Wall Street elite. This includes Peter Pang at JP Morgan, who also put his fair value price target 45% above current levels. Here's the prime reason why the Zen Ratings and Wall Street analysts are all singing their praises. It comes down to earnings growth, where results are expected to increase 120% year over year. That is some serious earnings momentum. The key risk here is valuation. MKSI is trading at a PE of nearly 50. That is priced for strong, consistent growth. So if semiconductor equipment spending slows, then shares will deflate rather quickly. All right. But all in all, it's probably the most compelling stock on our list today. Okay, there you have it. 6 different stocks to play quantum computing. 2 speculative, 4 more solid. Drop me a comment below about which of these 6 is your favorite, or perhaps share another quantum stock you like even more and why. And if you're looking for more stocks poised for serious outperformance, you'll definitely want to check out my video featuring 4 stocks like Palantir that could explode higher in the coming year.